Hey guys, cryptos took a turn for the worst along with the stock market last week, and we're actually expecting some more downside as of our last update, my State of the Cryptos update from, I believe, Thursday or Friday. And well, we seem to be in a bit of a consolidation at the moment. This is, of course, an update on Ethereum Classic specifically, although we will look at some of the other coins as well just to compare them. And these charts are available in the description below, so check those out if you are curious. But this is our chart. I think I presented this on our last update on Friday, and we had this impulsive red pattern taking shape. And unlike, I would say, a lot of the other cryptos, we haven't quite invalidated this one first wave up, first wave impulse up, and the three-wave pullback down. So technically, this is still valid because we haven't broken our low from May 12th, which sits around 1550. But we're getting very close to invalidation. And if we do have our continued downside, we will break it. Many of the other coins have. As a matter of fact, Bitcoin is looking that way. We broke on the key support levels, so technically it's in the same posture, although we see a bit of a bounce. So we might have our third wave down with a fourth and a lower fifth to come, which may give us a double bottom. Ethereum clearly broke its low from May 12th, so that was our first indication that we had a good bit more downside to come. And various other coins are in various postures themselves. Bitcoin Cash has also broken its low, although it is starting to lose momentum when you look at the MACD. So we're going to focus back on Ethereum Classic. What are we looking at? We have likely finished at least our third wave down. So again, if this is the pattern in action, this entire rally up to the peak that we hit on May 24th is best classified as an ABC, unlike the blue pattern here. So again, it doesn't mean it can't be the impulse hit because we have to break 1550 to invalidate this, but that's what we're calling a three-wave correction up. And our final fifth wave down, again, this is a bigger picture C wave. So again, we call that the bottom. That means that our C wave actually would finish here. That's what this red pattern is indicating. So if that is the case, we'd expect an impulse or at least an ending diagonal to finish. So in other words, we'd expect some kind of a 5-wave pattern to finish this pullback. And here, I think I was projecting possibly an ending diagonal, but we've come down low enough that we're either already done or we're going to have a slightly lower, slightly less deep fourth wave pullback before we finish. So we might not bounce that high. It might be a smaller consolidation somewhere in this range before we have that final low to finish things off. No guarantee yet. Again, we are seeing some divergences on the MACD. So you're seeing how we've been moving downwards in price while the MACD's become less and less stretched. That's a good development. We want to see that divergence to indicate a bottom, but we're not totally out of the woods yet. Now you can kind of see up close that we do have a rally in place, but so far it doesn't look like the impulsive rally we'd like to see. Could be a first wave up, very small degree first wave. If that is the case, we need to see some follow through, but if we don't see a clear impulsive structure up, then we're not going to be able to take the lower low off the chart just yet. So expect something that looks kind of like that. Maybe obviously this is arbitrarily drawn, but you want to see a 5-wave pattern up to indicate that we've bottomed. Otherwise, if we see a 3-wave zigzag up or a flat correction, something like that, that would be indicative that it's just a 4th wave bounce and that we have that lower low coming our way. That's where we're standing, at least on the smaller picture. And I'm actually going to adjust this because, well, now we're way down here. So in theory, we could still have a 1-2 in place, and our pivot box would move a good bit lower to where our 0.618 extension is to the 0.764. So we need to break through that to put an immediate finish to the immediate downside. So that's a long way up from here considering how much we've fallen. And again, my primary pattern is that we have that lower low coming. Red is primary. Again, that was kind of my message on Friday. I was expecting lower just because we have the setup for exactly that. So this is the long-term Ethereum Classic chart, and we are still maintaining some divergence, especially off the bottom we hit on May 12th. So as we get lower and lower, it looks like the MACD may continue to diverge. So that's a good sign that we're still getting near a bottom. Unlike most of the other coins, Ethereum Classic did not hit its ideal retracement point, which is this blue box here. We fell just a little short. So again, 1550 was the low. 1425 would have been the shallowest standard retrace. And that is based on multiple confluences, one of which is the 61.8% retrace from this high in the middle of 2021. The other one is the equivalence of the A wave to the C wave. That's what we have shown with the Fibonacci extension tool here. Typically you see a 1-to-1 ratio, and we didn't quite get there. And 1-to-1 would be the minimum expectation. You would expect you wouldn't be too surprised to see it go to the 1.32 extension. That's the bottom of the box at 745. But so far, it's doing what we would basically expect. When we look at the internal structure, again, we had our B wave high in September 2021. 1, 2, 3, 4, 5. It's got that diagonal look to it. You got possibly a 3-wave pattern here, 3-wave up, 3 waves down, 3 waves up again. And then this could be, an A wave, B wave, and a C wave. Regardless, whatever this pattern is from the recent peak, again on May 24th, we'd expect some kind of a 5-wave finish because C waves are expected to be, again, an impulse or an ending diagonal. If we do get that spike down, expect it to dip into this box. Again, I think our lower targets here are we're actually projecting a double bottom, just like I mentioned with Bitcoin. So we might not get any lower than we already got, or we may get a little nominally lower. Point is, there's not much room to the downside. There's not much bear fuel left, if you will. And if that's the case, then we should spike down and turn back around. We'll see what the stock market does, because I've been hinting at the stock market being in a similar situation. I'm going to pull up the Dow real quick, in which we had what looked like a nice impulsive start. We had a 1, 2, and a 3. Looked like a nice 4th wave, and then we just fell right down through the floor. So this could be a fake out 4th wave bounce, and we're finishing with a lower low, or this is the start of a diagonal pattern. So you have a ABC zigzag up, ABC down for a B wave, and we may have a C wave that takes us up. So it'd be an ugly 3-wave first wave for the larger, bigger picture rally. So this is interesting because, again, I was thinking maybe cryptos could run ahead over the weekend, and they may be, because we've hit a substantially lower low, although the stock market hasn't yet. So it might be ugly on Monday when the market opens. Look to the futures tonight. Maybe we get a quick spike down in reverse, or we get more of a consolidation, and then we dip much lower, more vigorously. It's yet to be seen what happens, but the two asset classes have been tied together for quite some time now. Now, bigger picture, I haven't really changed anything on this chart. We have our high over here. That is, I'm calling it a first wave, but I've been mentioning that it's probably best identified as a major 3rd wave, because that's what the Bitcoin and Dash charts are showing. So I keep pulling up Dash because I have a clean chart there with a little less clutter to demonstrate what I mean. But that's a 3rd wave because we have history going much further back. If that's a 3rd wave, we had about a 38.2% retrace from there for our 4th wave bottom, which may or may not be over, because depending on what we see in the next few days, will we break our major support? Maybe, maybe not. But that would mean that we have one final rally to go. That would be the major 5th wave top. And Ethereum Classic very well may be in the same situation, in which that was a 3rd wave top, and this possibly is an A wave with a B wave coming and a final C wave to take us up top. So basically, if I had to renumber all this and redo the pattern, I could actually, I'll do it right here using this nomenclature. So this would be an A wave, our dip would be a B wave, and our final top would be a bigger C wave. And I'm actually going to increase the degree here because it's, would it be a primary? I'll get this straightened out by the time we release this, but I'll put a different color on it just so it stands out. So we'd expect one more impulsive rally. And when I say impulsive, it would be a C wave, because again, we're looking at this as an A and a B. So you'd expect a 5-wave impulse to finish off this pattern. So maybe a first wave into that blue box, 3rd wave, 4th wave consolidation, and a final 5th wave to take us all the way up there. So we would have a very strong indication of the continuation of this rally once we bottom and get our 5 up into this box. Again, this box has not moved. Look for some kind of a rally, probably somewhere north of $45, $50. I'm just going by the symmetry of where the 4th wave stopped. But any kind of 5-wave impulse we see up from where we are right now would be a good sign that the correction is over. And again, this purple A is more likely going to be a first wave, because based on restructuring this chart, going with this aqua colored count, we'd expect a 5-wave rally to finish, because again, C waves are either 5-wave impulses or 5-wave ending diagonals. Either way, it's going to get us back into this general region. I know I've had this 1030, 1034 target on this chart for probably a good part of the past year or so. It still stands there. No matter how ugly this crash has been, it's still there as a very strong target for topping. We're going to see where we get when we look at this as a possibly a first wave. There's confluence there. Now, if I take this first wave and pretend it's actually a 3rd wave, and we've had a 38.2% retrace, that could project differently. So let's do that real quick before I let you guys go. And if we have about a 38.2% retrace, just about there, that would mean that we have some areas of, well, we have points of central tendency around 236, 655, and higher than that as well. So again, it's going to be crucial that we break the top of our May 2021 high. Again, if this is a third wave top, we're not projecting quite as high as we do if we project assume that this is actually a first wave top. So again, a lot of ambiguity on the big picture, but on the short-term picture, again, we don't have too much downside left based on what we're seeing. The extensions, we may see a bit of a rally that could end up being a fake out rally, kind of a dead cat bounce or a consolidation before we have another spike lower. So we're going to have plenty more updates coming our way. Subscribe so that you don't miss them. And if you enjoyed my video, don't forget to give me a like. Till next time, thank you for watching and happy trading.